A very happy Diwali.
Hello and welcome. You're watching Countdown right here on Bloomberg Quint, the last day of this truncated week, and nothing much is happening on the benchmark indices or even the broader markets. But we'll get to that in just moments from now. Let's quickly run you through the headlines at this moment. It's a listless day of trade for the markets heading into weekend. The Nifty trades little unchanged. The Nifty Pharma Index is the top sectoral gainer. Data from AMFI suggests that equity funds saw inflows worth 15,000 crores in the month of October. Local funds too saw inflows worth about 35,000 crores. Oil marketing companies are leading on gains on the Nifty after WTI crude prices slip into a bear market. And Bharti Airtel is one of the top Nifty losers today after Moody's placed its current rating on review for a downgrade. Dredging Corporation remains locked in upper circuit after the government okays a proposal to offload its complete stake to a consortium of 4 ports. Good afternoon, Neeraj. Last day of trade. It's a truncated week. No fireworks.
No fireworks at all. About 1/3% lower, in fact, for the key indices. But yeah, I think that's the summation. There are no fireworks out here in the markets today. In fact, we are drifting lower in the last 30 or 35 minutes of trade. No alarm bells, but no fireworks either. The mid caps and the small caps and those indices too, when we started over the very listless start, to be honest. Currently, the small cap index still about lackluster. The mid cap index, though, about 138 points higher, so the market breadth could be marginally positive in trade today. But I'm sure Devina will speak about that right here, about even Stevens for the market breadth. Better part of the trading day, the market breadth was positive. But I'm sure, as I said, Devina will speak about that. Let me just quickly give you the heat map and what's happening at the large cap stocks in the session today. And a fair bit of green on the screen. OMCs and almost anything that benefits out of the crude price fall is doing rather well. So you have an HPCL up 4.5%, Asian Paints is up about 3.5% in the session today. BPCL about 2.5% in the session today, so good going. Sun Pharma has had some good gains. I don't know if it's got to do with the Taro numbers or generally the sentiment around select pharma names improving, but Sun Pharma is up about 3% in the session today. Yes Bank adds on to some gains, and Maruti adds on to some gains too, about a couple of percentage points higher for Maruti too. What's not doing well? Small cuts coming in, one in Hindalco, two in Infosys, and I think the rupee pullback or the rupee strengthening probably impacting the sentiment on the IT companies. Dr. Reddy's, the Duvada plant clarifications weighing in, and Bharti, the headline stated about the Moody's call on Bharti and under review, and therefore that is weighing in on the stock. Last but not the least, two heavyweights, Reliance and TCS, both of them under pressure. No surprise, this is what's happening to the markets. At least the large caps under a little bit of pressure. But Devina, what about the mid caps and the small caps?
Well, it's not much different for the mid cap and the small caps as well. And like you highlighted, the advanced decline ratio pretty even, Steven, there. So you're not tilting towards the bulls or the bears this afternoon. But a few stocks are doing well on the back of specific news as well. So if you take a look at the PSU band, there's a few stocks on the back of the government looking to offload its entire stake in Dredging Corp. That stock, for one, has been locked up on upper circuit. And following that, you have other stocks like ITI and SCI, that's Shipping Corporation of India, doing extremely well. On the back of some news, you've got Linde, which is up about closer to 20%. Linde India on upper circuit. There is delisting news surrounding this counter and a buyback, possibility for buyback announcement coming in for NHPC, which is driving up the interest in the stock by about 4.5–5%. Among some stocks that are seeing activity on the volume side, you've got an Infibeam, which is up about 14% of the back of 7.5 crore shares getting traded. Then you have a Gateway Distriparks closer to 2.5 lakh shares trading there, and an Oriental Bank sees about 77 lakh shares being traded, price of about 6%. Amongst the losers, you have an Indian bank, which has seemed to see some profit taking in today's session. That's down about 9%. Oberoi Realty and V-Mart are some of the other bigger losers in trade today. Neeraj.
Well, thanks a lot for that, Devina. Well, let's get you some perspectives. I think the next 25 minutes, some very crucial discussions. Firstly, the data coming out from the Association of Mutual Funds of India. India equity funds continue to have robust flows. In fact, 15,000 crores of inflows in the month of October, which is Well, actually a really good sign. It's the highest number since February 2018. And arguably the second highest inflows that we've seen in the month of October, though that's inconsequential, frankly, since Feb 2018, being the highest flows is more important. Domestic funds net had an inflow of about 35,000 crores in the month of October. Let's get a voice on the importance of these numbers. Radhika Gupta, the CEO of Edelweiss Asset Management Company, joins us right now on the phone line. Radhika, good having you. Thanks much for joining in. First, the good news, and then a couple of wrinkles that I want to talk to you about. Equity flows, 15,000 crores. This is not a number that too many people would have anticipated. Seems like both the SIPs and maybe the lump sums have done okay.
So it's a good number, no doubt. I want to break one bubble in the number as I understand, but it's a good number. 15,000 crores, Neeraj, of which 2,500 odd, as I understand, is arbitrage funds. So you really have to take that out because that's not equity. That's short-term money that comes in and out. But even then, it's about 12,000 crores of equity flow versus, I think, the previous month of 11,000. I think given market conditions, it's a very, very good number. Two things to keep in mind. I think one, last month was a month with a lot of one-time fund offers. So 2,000-3,000 crores was raised at least in new fund offers, which is what is going to account for this. I think the big thing that all of us should be smiling about is the fact that the SIP book is 8,000 crores. That were almost 8,000 crores is what was reported. So I think that makes for a very, very comforting number. So I think the combination of rising SIP book plus a lot of new fund offers and arbitrage fund inflows makes for this 15,000 crore number.
Interesting. Radhika, I remember a conversation that we had about a few days ago when we were talking about one aspect that was looking like a small worry, and that's the outflow from the fixed income category. That has continued in this month. I think this marks the 3 straight months of outflows from the fixed income side. How would you view this behavior?
A little concerning, I would say, and also not unexpected. I think two things. One is that over the last few years, and remember the last 1 year of fixed income returns obviously haven't been the best because we've been in a rising rate environment. So, medium duration and long-term fixed income funds have obviously underperformed short-term. So that's bothered investors. Second, you've had the whole credit event in September that has hit some of these funds. So the combined effect is leading to, what is, I would say, a large fixed income outflow number as we had chatted about before. And the third one, as I said, is that, liquid money that is going out or that went out last quarter isn't coming back full steam. So equity on the whole looking good, fixed income looking patchy.
In the backdrop of the recent recovery in the markets, Radhika, and if we continue the way we are, crude oil is now in the bear market, off 20% from the highs for WTI. The currency also looking stable and probably seeing some amount of strength beginning to bring in. And the equity markets continue on the same path. Do you see more of an inflow in the subsequent months?
I think equity flows are going to continue to be very healthy. I think in this whole period of turmoil around credit as well. When you talk to investors and advisors, there's just been a lot of maturity among most people. In fact, most people are looking at this as an opportunity to buy in the mid-cap segment, where corrections have been as deep as 20 to 30%. So I do expect that if the news flow dies down, if some of the macro events are clean, people will take advantage of the next few months of volatility. And, remember the SIP book is growing from strength to strength. So, you can't take away from that, and that takes away from a lot of volatility in returns. So, yes, I do expect this to continue.
Probably, if you could throw some light more in terms of the kind of retail participation versus institutional participation that you anticipate in the near term?
I think, look, the equity book has largely been a retail and HNI one, and SIPs have been, broadly retail. I mean, at an industry average of somewhere between 3,000 to 4,000 rupees per SIPs. I think everybody will say that they're not seeing a material impact. Their SIP books are growing from strength to strength. That's what we're seeing. That's what peers are seeing. That is largely retail participation, and I think it is driven by largely individual financial advisors who've been less impacted both by the regulatory changes and they're used to the kind of market volatility that we've seen. I mean, they've seen 11, they've seen 8. So I think that money is retail. I think the institutional money is fixed income money, which has seen the turbulence that, Neeraj just mentioned.
Radhika, I drive back to that point again, and I know you just briefly mentioned about how there could be a small concern there. What could change this fixed income outflows? Because I think it all started, while it came into notice only when the ILFS issue came into account, and then we started speaking about it, but it's continued thus far. What can change that spate of outflows that we're seeing from that category?
I think there are two things. I mean, as I said, liquid and non-liquid. I think liquid will come back, Neeraj, relatively sooner once there is some calmness in the liquidity, from a liquidity point of view, as more CP issuances start for NBFCs, as rollovers continue to happen, and you're seeing some very small green shoots of that. So I think give it another month or two of normalcy in the market, no major NBFC kind of defaults or CP issues, and I think liquid will come back to normal. I think this industry has seen this time and again. I think the vanilla fixed income will take some time to come back. As people see either a falling rate cycle. See, fixed income is a category where largely retail money has not participated, with a few exceptions. So while it's a very good time to invest in fixed income and everybody is going out and encouraging customers to do that, I think it will take some time. I don't think there's an easy answer, but certainly calmness in the credit markets will help.
In light of that, Radhika, what you're trying to say is obviously the pressure that's building up from the institutional side is in order to create a sort of a buffer in case redemptions happen at their own end. So they have that cash pile up with them.
Yeah, it's that, and it's also that a lot of institutional capital which went into liquid funds maybe this quarter has been parked in banks. Institutions and corporate clients are also waiting it out. I mean, there is a little bit of a flight to safety going on. So they're also waiting it out to see, how the September measures happen, how these rollovers of CPs that are due primarily through the month of November, how they happen. So I think a lot of people are taking a very wait and watch approach. Once that's over, perhaps calmness will return.
Okay, Radhika, thanks for calling a spade, and thanks for joining in today and talking to us. Appreciate your time.
Yes.
That's a view from Radhika Gupta of Edelweiss AMC. Well, I think it'll be important to get one more voice on this. We actually plan to get Suyash Chaudhary to talk about how the FPI interest in the Indian bond markets have returned, and there is a chart which will come up, and we'll talk about that in a bit. But since he's with us, let me first get, and we'll talk about this chart as well, as I said, but since Suyash Chaudhary is with us, let me first get his perspective on what's happening in the fixed income category in the mutual funds, because it's, as I see it, I think it's the third straight month of outflows from the liquid category or the fixed income category. Suyash, good having you. Thanks much for joining in. Before we talk about the FI interest into the bond markets, just a quick perspective here. 3 straight months. Radhika Gupta, who was your guest before you came in, thought that the plain vanilla fixed income inflows might be still some time away. What would be your guess?
So, there are two aspects of this. One, if you look at the liquid category, you should also remember how the banking system liquidity per se is panning out. And, the banking system liquidity has shrunk quite substantially, and the forward view on that is it will continue to shrink as we go ahead. Liquid funds and money market funds will be a proxy for the banking system liquidity as well. And I think to a very large extent that is what they are reflecting. Obviously, there is probably an element of risk aversion which will settle as bulk of CPV financing gets behind us. As far as the short-term etc. category is concerned, rates have been volatile for a very long period of time. It is probably now that they are beginning to settle in as the rupee reverses somewhat, and crude prices are off their recent highs. So the carry in let's say AAA oriented fixed income books will start showing through in returns, and probably over the next 2 to 3 months this will start getting shown in allocations as well. So remember that the underlying macro environment has turned quite hostile, and fixed income to a very large extent is a proxy for that.
So is it possible to kind of try and guess as to what would the element that could turn this around? Because I remember when a rather relatively smaller number came out for the month of September, the September data which came out in the month of October, it was a relatively small outflow from the fixed income category, and CEOs of AMCs candidly said that it is a bit of a worry because you don't usually see this. That number has only widened, Suyash, in the month of October, even though we didn't have as much of an ILFS scare in the month of October as it was in the month of September.
So again, I would point more to rate volatility than anything else. And you asked what can turn this. One is, you will probably have to see through the next few months. Don't forget, this also coincides with busy season on credit, and obviously we are not having too much of a credit cycle right now. But for whatever it's worth, liquidity tends to tighten over second half as currency in circulation picks up, and there is some pressure on front-end rates as well. I would expect this phenomenon to start to settle down over the next 3 to 4 months, certainly after March. One big thing to remember in all of this is what the US dollar is doing. Remember, the stress on emerging markets generally started with the rise of the US dollar, if you will. And if the US dollar is going to settle down, probably on the back of the verdict from the midterm, or if economic data at some point were to start to taper off in the US, that would in turn benefit emerging market risk premium generally, and would benefit allocations into India fixed income as well. I tend to think many times when we have these sorts of debates, they tend to be quite inward focused, and we have to also consider what's happening outside in the rest of the world. And like I said before, asset markets have turned hostile for emerging markets, particularly specifically in fixed income. India has been a current account deficit country, which with its own obvious drags that come with being current account deficit. So I would expect a global turnaround would be led by some stagnation in the US dollar, which probably one can look forward to sometime maybe early next year if data there were to begin to taper off. Locally, as liquidity provisioning from the RBI improves, and they have turned quite proactive with respect to liquidity creation, and specifically as we enter the next lean season on credit that starts from April, I would expect some of the fixed income related drag to come off.
So Yash, from the perspective of a foreign portfolio investor, which they've just over the last 9 trading sessions started to put in money into the Indian bond market. I wouldn't say in a very big way, but it is kick-starting. What is driving the confidence for them, and do you think this will turn into a meaningful inflow anytime soon?
I think there is some tentative interest emerging back into some emerging markets which have fundamentally had slightly more, stronger macro. And India is certainly one of them. As I said, our current account lately has been a bit of a problem, but I don't think anyone doubts the financing of that current account. If you see 2 things that specifically have worked in India's favor, one is, recently inflation has been undershooting RBI's forecast, leading to both RBI as well as markets forecast being brought down, which in turn means that we are now anticipating much fewer rate hikes than market was generally anticipating, let's say a couple of months back. The second thing, which also is very beneficial for India, is this 20% fall in oil. And if oil falls, suddenly our current account begins to look slightly better, our inflation outlook begins to turn, and certainly, pressure on currency begins to abate also. But I can't emphasize this point enough. I think if a sustainable turn were to happen, it would be led by people's view on the US dollar and the actual performance of the US dollar. And in that context, data coming out of the US is very critical to watch for. Couple of data there that one has to look out for is, for instance, what's happening to the housing market, where there seems to be some turn, some early turn that seems to be happening. Business fixed investment seems to have slowed down. And if the midterm has thrown a mixed verdict in the sense that the House has gone to the other party, if future fiscal stimuli will be more difficult to achieve, all of that would probably end up being slightly bearish for the US dollar, and hence bullish for emerging markets like India.
But what about the interest rate cycle out there, and if you see them increasing interest rates. So obviously this time around the FOMC has kept interest rates intact, but they've indicated a probable hike in the month of December, the 4th hike that they'll probably take. Do you see a comparison of foreign money on the pros and cons of investing within an emerging market like India and versus keeping money in the US?
Absolutely. So, one of the things working for us is on a real rate basis, the differentials are quite wide. So if you were to see, India CPI averaging at around 4.5%, versus where, let's say, a 5-year government bond is, or let's say where a 5-year AAA corporate bond is, which is around 860, 870. You are getting a meaningful positive real rate versus, let's say, what the case in the US is. So the starting point is a reasonable positive real rate differential. Just as a comparison, this wasn't certainly the case in 2013, where interest rates in India were deeply negative on a real basis. Secondly, if the bulk of the rise in the US dollar is past us, that would help emerging markets. And there's one data point one should remember. If you see the Fed's own forward forecast of growth or their GDP, they have not really increase the long-term trend rate of growth, and they think over the next couple of years growth will start converging towards the long-term trend rate of growth, which means that this late fiscal stimulus that is currently driving US GDP will probably fade off in the next 6 to 12 months. And markets being forward-looking, once there is reasonable evidence that forward-looking indicators are beginning to turn down, we expect the US dollar will also start to stabilize and probably turn down. So that's the big one that we will look for. In India, the bulk of the rate cycle for now seems to be past us. Financial conditions have tightened very substantially, which by itself is a reasonable detriment to forward growth as well as inflation. So we would expect more stability with respect to RBI policy as well.
In light of that, your assessment of the near-term to medium-term picture on the bond yields here in India?
So what we like is the front end of the rate curve, which is rates up to 4 and 5 year, but largely only the the super AAA and the sovereign. The reason for that, why we like rates up to 4-5 years, because we think market was exaggerating expectation of rate hikes from RBI. Financial conditions, like I mentioned before, have been tightening significantly for some time. The latest wobble in NBFCs has in fact further tightened financial conditions. So what you would expect is the regulator to push against that instead of hiking further into this. So bulk of the rate hike cycle is probably past us, and bond deals are reflective of probably another couple of rate hikes being priced in. So that's why we like the front end. Why super AAA and sovereign? Because we are probably in an extended period of reasonably tight financial conditions. And tight financial conditions are typically associated with rising credit spreads and probably rising instances of defaults as well. So Indian credit spreads on lower rated paper, given the illiquidity in that part of the market, is definitely not compensating investors to take that kind of a risk in this part of the economic and financial market cycle. So clearly the focus has to be in super AAA and sovereign up to 4-5 years of maturity.
Okay, we'll leave it at that, Suyash. Thank you so much for taking the time out and being with us today. I appreciate your time. Well, that's the view from Suyash Chaudhary of IDFC on, well, one, FI is returning to India on the debt markets and broadly what's happening in the equity flows or the debt flows in a fixed income category as well in the month of October gone by. Now to the yet another important conversation. Moody's has warned of the US-China trade war hurting global growth. The ratings agency has put a note on Thursday stating that global growth will fall below the 3% mark for the next 2 years, revising its earlier target of 3.3%. And of course, the Indian economy might also slow down to about 7.3 in the next year as domestic demand tapers on higher borrowing costs due to rising rates. Let's discuss all of this in greater detail with Mary Deron of Moody's Investor Services. She joins us right now on the phone line. Mary, good having you. Thanks much for joining in. Are there downside risks to this projection? Because as I would understand, the trade war between US and China is a moving piece and moves faster than what any of us could probably imagine.
It is still indeed unclear about really how severe the trade tensions and how broad, I would say, the tensions between US and China will be. What we take into account in this forecast, which, as you said, puts a global growth picture below 3% for the next 2 years, is a further intensification of tensions between the US and China. For instance, possibly an increase in tariffs, as has been announced or proposed, to 25% at the beginning of next year. But there are potentially further downside scenarios if, in particular, the tensions were to broaden quite significantly from trade to involve other relationships, and in particular investment between the US and China. And that could start really having quite a significant impact on investment across the board, across the globe, as companies would face heightened uncertainty in that environment.
Could you talk a little bit more about your forecast for India growth on the GDP side at 7.3%?
Yeah, so we do indeed forecast India's GDP growth at 7.3% for the next 2 years, after 7.4% this year. And India is less exposed to the global trade environment. It is not an economy that is particularly reliant on trade. What drives that slowdown and a downward revision compared to our previous forecast are more domestic factors. And one is the impact of higher oil prices that we had earlier anticipated, that we think will have an impact on purchasing power. The other is the impact of tightening financing conditions. We have seen the rupee depreciate and interest rates rise. And in particular, more recently, we've seen pressure in the non-bank financial sector that we think will lead to a constrained availability of credit in the economy, and that is likely to have some negative impact on growth.
But from a slightly more long-term perspective, obviously we've been seeing the Reserve Bank of India taking measures to make sure that there's enough liquidity in the system. So any particular reason in terms of that factor that could improve itself in the near term because of the measures being taken by the RBI, and whether that you've taken that into consideration?
So we do indeed. We have observed that, and we take that into consideration. That the slowdown that we expect in credit is a slowdown. So it's not really an outright severe constraint on the availability of credit. And there we do think that the measures taken by the RBI will help. But with the non-bank financial sector under some pressure, and with banks still working on a resolution of previous NPAs, non-performing assets, that we think will go on for longer. Overall, for the economy as a whole, we think that credit growth will be somewhat slower, and that will have an impact on investment.
Which are the other factors that you've probably considered, Marie, in terms of the fiscal deficit, the twin deficits for India, and how you're projecting them to be?
So we expect that the overall stance around gradual fiscal consolidation that the government has been maintaining for several years now will be maintained, and so that would come with a deficit at around 3% of GDP in the next 2 years for the central government. That should be broadly neutral as far as growth is concerned. Where there could be some downside risk is if, in the face of what are indeed twin deficits, so fiscal deficit and the current account deficit for India, investors, global investors and also domestic investors got more worried, more concerned, and we were to see a further tightening of financing conditions. That is not part of our baseline, certainly not in a severe fashion, because we think that overall the policy framework is credible, is conducive to stability in India. But we have seen more intense pressure on some other emerging markets, and so that could be a source of downside risk for the Indian economy.
Marie, one of the factors that was a telltale sign on stress on the Indian economy, crude, has just come off a little bit. If indeed the twin deficits do not worsen off significantly, what would your call be on Indian growth? The reason I ask this to you is because when we speak to a bunch of equity market watchers, and on the global side, everybody says that if a global trade war were to take center stage, India would be better off because of the growth, internal, growth looking inwards, and not such a high exposure to the global economy in the truest of senses.
Yeah, that's right. So our baseline, what we think is most likely is that the twin deficits will be broadly stable, and that relies on the assumption that oil prices stay around the current levels, and that trade flows, while slowing slightly, do not really decelerate particularly fast. And yes, indeed, in some of the downside scenario we might consider, but really a heightening of the trade tensions that will come with much slower global trade. India would be less affected than some other economies in Asia that are much more reliant on trade. It doesn't mean, in our view, that it would not be affected at all, but the effects will be more indirect and less pronounced. So for India, our forecast as well as alternative scenarios are mainly driven by domestic factors, and really at this stage focused on the impact of oil prices and the impact of the current situation in the non-bank financial sector, which is still resolving itself.
Okay. One last question from my end, Marie. If the Fed language is to be believed yesterday, we probably have a rate hike on the cards in the month of December, but we don't quite know what would happen in 2019. If the pace of Fed rate increases is not as swift, in the remote chances that it is not as swift, then would the downside risks for India ease off? Because if I'm not wrong, one of the key factors why you believe that the Indian growth rate will slow down is because domestic demand might taper on higher borrowing cost due to increasing cost of capital.
So we assume that the Fed will increase interest rates in December, and we assume that there will be another 3 interest rate hikes by the Fed in next year, in 2019 or towards early 2020. That is our baseline assumption. That's probably broadly in line with financial market assumptions. It's always difficult to tell what exactly is priced in, but I think that is likely to be broadly in line with that. A slower pace of increase in interest rates by the Fed could have 2 effects, and at this stage it's difficult to tell what, because it would really depend on why the Fed is increasing interest rates more slowly. If it is increasing interest rates more slowly because the U.S. economy is slowing more rapidly than we currently think, then overall that would be bad news for the global economy, for India, but the global economy in general. If the Fed is raising rates more slowly because it perceives that inflationary pressures are building up more slowly, but the economy is still running at a good pace, then that is likely to be good news for the global economy. So I think we can see things really either way will really depend on what drives the Federal Reserve's actions as much as what it actually does.
Right, Marie, we'll leave it at that. Thanks so very much for joining us. Really appreciate you taking out the time and explaining your rationale behind the outlook on global growth as well as India. Back to the markets then, and we've probably deviated from it over the last half an hour, but nothing much is happening out there. We're absolutely flat on the Nifty as well as the Sensex, 10,586 on the Nifty. Sensex also marginally in the red right now by 0.2%. Let's bring in our guests, Rahul, Mohindar, Brijesh, Singh and Anand, Tandon. All of them here with us to take us through their views. I want to quickly get, the technical aspect and get some levels on the index first before I go across to Anand. I'll start off with you, Rahul. We had a good Mahura trading session. You saw the Nifty move towards 10,600, where we are currently almost at. What's the future outlook?
Good afternoon. I still think there's continued positive trends for the Nifty. I would say that you have some strong resistance which is likely to come up around that 10,730, 10,750 level. But all in all, I say the trend is positive. Keep a support level of 10,480 in mind and hold on further. I still think there's enough throttle. Some of the heavyweights should participate even further, be it the likes of a Reliance, be it some of the banking names. So all in all, I'd say broadly positive, but again, nothing that seems to be a sudden exaggerated up move that I would expect. It should be a slow and steady move trotting forward.
Banks be participating in this steady move? Rahul, good afternoon, Neeraj here, Happy New Year. Would banks be participating in this steady up move?
Yeah, totally. I think the bank nifty too looks positive to me. Of course, we've got near-term resistance at 26,300. But if you look at, say, the price action today on some of the names like Yes Bank, or for that matter, if you look at how some of the banks have picked up from lower levels, even Axis Bank, ICICI Bank, you can see there is strength there. You can see that there is a set of people who's willing to put in their money and bet forward on these. So I'd be still positive on banking. I still think there's good headroom on a stock like ICICI or a Yes Bank, even though it's short term.
All right. Brijesh, what's your call on the Nifty?
Devina, see, no doubt, Rahul has been saying I'll go with him only because Nifty still on the shorter term time frame of the chart has been trading on lower tops and higher tops, higher bottom formation. So what I feel right now on an immediate basis, support has been concerned 10,450 or even 10,400 would be acting as a support. It doesn't break. The momentum would be continuing on the buying side. Now, if we talk about the immediate basis bin, then anything below somewhere around 10,550, taking a spot level, one can take a buy call in it with the stop loss of 10,500 and play for the target of 10,670 or say 10,680 where the resistance lies. Might be taking a couple of days or say a week time frame before this target got achieved, and after that we can see a small profit booking.
Okay. What about specific stocks? That's the key question. Brijesh, let me come to you first. Your stock-specific ideas for the afternoon?
Near the front seat, the UPL looks good on the chart. On a shorter term time frame, it has broken this previous swing high that was of 738 and has been moving up with increase in volume. So somewhere around 743 has been quoting at the present rate, or somewhere around 741 can take a buy call in it for the target of 775 or say 770 with a stop loss of 728. And another call would be Hero MotoCorp. On an hourly time frame of the chart, the stock has formed a cup and handle pattern, which is a bullish pattern. Which somewhere around 29.45 or say 29.47 has been quoting. So present rate can be used for a buying purpose with the stop loss of 2900 and play for the target of 3100, or even the target can be extended to 3150 also.
By the way, Amara Raja numbers on your screen. Revenues up 22.8%, but I think the bottom line number is below what they did in the corresponding quarter last year. Now, a stark contrast to Exide. Exide, the PAT was above estimates because of a one-time gain, but the revenues were below estimates. In this case, I think at 22.2%, the revenue number doesn't look all that bad, but the PAT number is disappointing. Now, I don't know if it's happened because of a margin squeeze or some one-off exceptionals that would have come in. Just try and open the data and try and get you that perspective as well. But on the face of it, the bottom line number below estimates, and if it's caused due to an EBITDA performance blip, then that would not be something that the street would like too much. Maybe that's why it's weighing in on the stock. About a couple of percentage points lower for Amara Raja batteries at the current point of time. Difficult to get a really a fundamental, a technical view going on a stock like this, because it's just reacting immediately as we speak on the numbers. It'd be more pertinent to get a call on the trade side after a couple of minutes once the stock settles down. But I'm just trying to pull out the numbers and try and figure out whether there are some exceptional gains or losses that have happened as a result of which the profit is lower than what the street was working with, or are there other factors at play? Frankly, don't quite see any exceptionals. The numbers seems to be a margin squeeze. I don't see any big deferred tax number or a one-time loss that has come into play, which has led to the profit numbers looking lower. So it has to be something got to do with the EBITDA margins being lower than what the numbers could have otherwise looked like. Expenses have gone up materially for Amara Raja, and that's why it's weighing in on the stock. Okay, Rahul, Mohindar strategies are left. Let's get them first, and then we'll get in a fundamental voice on the show as well. Rahul, what are the stocks that you're recommending in the session today?
I think good price action that I've seen today on Maruti points me to the fact that this stock is in for a fairly good solid recovery. So I think 7,500 in the very near term. Again, this is more a November kind of strategy. Keeping us below the 7,080 level, one could go long on Maruti here. Infosys would be one on the sell side. where I think you might see some weakness. And we're looking at 645 as a first target, breaking which we could even move to 620. I'd look at shorting Infosys with a 680 stop loss.
All right, bringing in Anand Tandon as well into this discussion. Anand, what's your outlook now? We've seen, a few days of recovery. Last week was a bumper week on the indices. This week also, if we probably stay at where we are, you're going to have a positive closer to 2% on the indices. But anything that, has changed materially for you in terms of fresh investment opportunities?
Well, the only thing that seems to have changed is that, one, the assumption is that the oil prices will not go up dramatically from the fact. The other assumption is that Mr. Trump will not be able to carry out his agenda. If both these items are true, then certainly the market would have made a bottom. And I think you could start looking at investments, which is pretty much what the market is doing now. Especially given the fact that there has been a bigger fall in the smaller mid-cap companies, that is where the opportunity seems to be the bigger one. However, if either of those two earlier set assumptions are not going to be,
Anand, just stay on. Anand, just stay on. We're not able to actually hear your answer in a very clear fashion. We'll just try and patch that line properly and then get in that conversation going. Couple of these pockets which are looking very robust, and it's not a surprise, Devina, that OMCs are doing well, but Maruti Suzuki, after going to those 6,500, 6,600 odd levels, the last few days has bounced back. I remember we were talking about this piece of news about how car makers might slow down. Prolonged shutdown because of higher inventory levels. It doesn't seem to be deterring the stock too much. 7274 and counting, up 2% again in the session today.
Yeah, I mean, screaming by probably for some at those levels, but 6,500. I mean, we did probably come back to 7,000, then go back to 6,500 in the middle. But whether or not now, once again, it's an investment price goes to be seen. I mean, if we have Anand, then maybe he can answer that question for us. But nonetheless, most of the experts that we've spoken to have said that within the auto space, if you segregate all of them within the two-wheeler, within the PV, within the CV segment, then you pick up one stock from each of them, which are the larger names, then they'll work well for you. So probably Maruti falls under that.
It's looking rock solid right now. For somebody who's got a trade on this, Rahul, let's say it was brave enough to buy at, maybe not at 6,600, but say at 6,800. Maruti is carrying on from where it left off 2 days ago. Is there more steam left here?
No, I certainly think so. If you're looking at, the next 6 to 7%, my guess is it's on the upside. And, technically, if you look at shorter term intervals, you have a fairly solid possibility of that happening more towards the upside. I think what people are a little worried about is the fact that the Nifty has virtually had a V-shaped reversal. And to further clarify, from the 26th of October bottom, we've had the last 5 up without having any major dramatic question. Some would worry about that, but I think the kind of rally that we've seen is expected, because let's also not forget that the drop that we have the entire month of September and almost the whole of October was also quite dramatic and fairly sharp. So a sharp correction. I won't call this a total breakout for the longer term that we're going to make new highs. But I think, yes, this can reasonably move on further. The market should continue, and keeping that thought process in mind, we still have a good upside there.
Okay, that's on Maruti Suzuki at 7,200 odd, almost about 7,300. Brijesh, within the auto space, a Tata Motors, which has rallied from 160 to 200 now. Is there a trade here?
They've been at Tata Motor now. It has an immediate support at 180, 182 level. So that should act as a stop loss. Suppose someone wants to play right now on a buying side. but on the higher side, it has a resistance at 202 to 204. So, the risk reward ratio is right now is 1:1 only. So anything below 190, then one can take a buy call with a stop loss of 180 or say 182 and look for the target of 202 or 204. But the major resistance for this stock is somewhere around 233. So the 233 level would be the crucial level. Anything above that, then we can say for short term, medium term, or for the long term. The stock has come out from a bearish zone, and now we can see an upside. So overall, right now, only for the trading bet, 190 below, one can take a buy call with a stop loss of 180 and play for the target of 202 or say 204.
All right, gentlemen, just stay on with us. You will quickly hear out Bharat Shah of ASK Group, who talks about the turmoil in the NBFC space in the sectors where he finds value currently.
I think it is very good thing that has happened. Lot of NBFCs have been indisciplined. Many of them have poor quality assets. Many of them were reckless to have improper asset liability match. Many of them were in anxiety to grow, were lending at rates which were not sensible, and in any case many of them were lending to poor quality borrowers, and therefore time to time rude reminders like these sorts out the boys from the men, and therefore all that has happened in the NBFC and some of the concerns that the firms are going through is actually healthy and good for the quality firms, disciplined firms, firms which understand that lending, it is easy to lend, but the real work happens only when you have recovered what you have lent, and therefore the quality firms are disciplined in the lending rates, in the client profile, in the way they go about it, in their leveraging, and in managing their overall operations in a tight, proper fashion, which is what a lending business is all about. And therefore, all that has happened will eventually ensure a greater hygiene, strength, and actually greater respect and regard for better behaved, disciplined, quality NBFCs. So all what has happened, in my opinion, is very good.
Is that an investment category that people should look into now?
We have done it in the past, we have done it today, and we'll look forward to doing that in future.
Right. One last question, Mr. Shah, before I wrap this up. While you've been talking about using opportunities and using the market volatility and dips like this as an opportunity to start, building up the portfolio, which direction or which areas to focus on right now? Probably areas which are under-owned so far and have growth potential, or areas which are over-owned but the valuations were lofty and now they've started to come off. So which segments are you focusing on?
I think more from a bottom-up stock picking point of view, but having said that, clearly consumption, both durables, non-durables, is a fantastic opportunity. In $2.5 trillion GDP last year, almost 1.6 trillion was consumption, which is nothing. Only when this consumption from 1.6 will become 5, 8, 10, 12, that I'll probably start reflecting whether there is any further scope for it to grow. Till then, I think in my opinion, on a long run, there is a free highway there. On the banks, quality NBFC, quality insurance firms, again, there is a great long-term opportunity. Finance sector in general is a force multiplier. It usually grows at a multiple of GDP growth rate, and typically the growth rate of finance precedes that of the economy. And therefore, it always remains a very attractive and major area. But we have to act with discipline and find the right quality businesses run by quality managements. So NBFCs, quality banks, and the quality insurance firms, all of them represent great opportunity. Similarly, in automobile, auto parts, automobile, we have a critical ecosystem, whether we take two-wheelers, scooters, bikes, commercial vehicle, three-wheelers, cars. We are among the top largest to anywhere within first 5 ranks in the world in each each of these categories, and therefore we have a great critical mass both from a domestic market as well as international opportunity. Along with that, auto parts opportunity, which again is a significant one. Agriculture related, where important fundamental changes are brewing around, and over a period of next 5 to 10 years will witness more important significant changes. Therefore, quality agriculture dependent businesses will do wonderfully well. So these are some areas, but as I said, we don't invest based on economic macros. I don't think that global macros can have an unduly major impact beyond a point. It is not even buying of the themes or sectors. It is at the end of the day buying individual business for its merits or lack of it.
Well, that is Bharat Shah, and I think clearly in that conversation what came out was this whole trial by fire will separate the men from the boys in the NBFC space, I reckon.
Yeah, and he said that in the past as well, he's totally unperturbed with these periods of volatility that come about. Because when you're investing and you look at a longer term picture, you will definitely have periods of volatility which actually you should use to your advantage rather than disadvantage, because that's the time you get depressed prices at good valuations and you can build a good solid portfolio at that juncture. So I mean, and he in his terms said he felt like a kid in a candy store where everything is like up for grabs for him, and value buying, I mean, that's the right time now.
Well, the story will be there on the website as well. Do log on to bloombergquint.com and you can hear the whole interaction that Bharat Shah had with Bloomberg Quint. Okay, let's get in one more fundamental voice in the show. Nitasha Shankar of Securities with us in the studio now. Nitasha, good having you. Thanks so much for joining in. Happy New Year. Good having you. OMCs on the center stage of attention, and not without reason, with crude doing what it is doing. Near 70. Not too many people would have thought of this maybe 4 weeks ago. But what's the verdict on these counters now?
Essentially, if you're looking purely on the movement in the crude prices, as well as the fact that these companies happen to be excellent dividend plays, they do look attractive. But overall, the kind of government intervention that happens for the entire OMC space as well as the upstream space, one can really not cash upon these opportunities, or rather retail investors don't really get much of an opportunity to cash on these stocks. So
there has been one intervention, right? In the last 3.5 years, I agree that 1 rupee move has kind of destroyed the carefully crafted non-intervention story. But it's been one interference which the government said this will not be a regular play.
Absolutely. So I sincerely hope that never happens again. And just like I said, just on the basis of the way the crude prices have been moving, as well as the fact that they make excellent dividend plays, we would like to have some exposure towards the OMCs, HPCL being the top pick over there, but we would not be overly invested over there, and would rather diversify the risk by investing in better energy names like Reliance Industries, which is more of a conglomerate and a diversified business, and including companies like GAIL, NGL, as well as IGL over there.
Would you look at specialty chemicals as a segment?
Of course, we are positive on the small cap companies over there, Fairchem as well as Fine Organics being two companies that we are quite positive on. However, having said that, they will be subject to the kind of volatility that you see on the small cap space. So that's something that needs to be kept in mind before investing in them. Otherwise, in terms of the prospects for both the companies, we're quite positive on it.
What about Deepak Nitrite? Because that seems to have been off late the flavor of...
We don't really have any coverage there.
All right. IT is a pocket now that we're seeing, there is a possibility of some strength coming back into the currency, though we've not really seen a big move yet, even though crude oil has come off closer to 20%. But the prospects for IT as a pocket and the off-late sell-off that we've seen, profit-taking, if you would so call it.
So I think profit-taking was bound to happen given the way IT company counters have moved up. Most of them have moved up in a single direction for most part of the year, especially at a time when the rest of the stock markets were the way they were. Having said that, there is a revival happening on the demand side, which is what is going to be helping out their top lines. We're not really looking that much into the movement on the currency side, because it does provide some amount of optic relief, but there's very little movement as far as their margins are concerned, because most of it tends to be hedged. But otherwise, purely in terms of a revival on the demand side, we are positive on it. Large caps and the mid caps being our major preferences over there.
Okay, we'll talk about some New Year ideas as well with you, Nitasha. Just stay on. A couple of stocks that are moving around, just need to mark them. Bring up Stride Sassoon, and I don't know if it's perked up in the last few minutes of trade or otherwise, but the stock is doing very well for itself in the session today, 10% higher, 471 and counting. Actually, maybe I can get a fundamental view first before you get a technical view. You track Stride Sassoon at all, Nitasha?
No, not trading.
You guys don't try. Okay. Rahul, Mohindar, Pharma is having a mixed day today, I might add. But a lot of large moves happening in the pharma space. Sun Pharma up 3.5%. Dr. Reddy's is down about 2.5%. Stride Sassoon up about 10% in the session today. Anything that stands out for you?
I think the move on Strides, I won't be able to comment immediately speaking, but I would let you know that 440 was a key resistance we had marked out, above which we assume the trend is going to be bullish. We've identified that there's been a lot of volume that's been consolidated at around the 410 to 415 odd level. So there's tremendous support at that level. So the bounce up from this point is definitely a positive. But within pharma, one of the stocks that we continue to like, despite the big rally, has been Divi's Labs. So here we still are maintaining a positive stand. I would say it's more of a short-term play for a lot of people, simply because the risk-reward perspective doesn't fit in. But we still like the stock. We think 1620 is a near-term target on Divi's.
Some queer moves happening in stocks. Infibeam for the last 3 or 4 days has been on a roll. Right now, as I see, there's been a sudden sharp surge in PC Jewelers. That's gained, what, about 12-13% in the last few minutes of trade. Look at that move. And look at the volumes on that one. 54 million shares traded on PC Jewelers. I dare say, please be careful before you trade this one, but it is in the green now. It was in the red some time back. A strong mover in the last few minutes of trade. Infibeam, of course, continues to rise and shine, so doing okay for itself. HCC in today's session has moved up quite strongly too, so good going. And a lot of PSU names have done rather well for itself. Nitasha, actually come in on this. I think the Dredging Corporation announcement got a flavor in a lot of PSUs. So ITI went up 6-7% today. We saw NHPC, I think, because of specific news, of course, moving up. ITDC was in the green too. What's happening here? I mean, for people who have these stocks, let's say for whatever reason, would you use these moves to get out? Do you have an opinion here?
Absolutely. We would definitely use these moves to get out. It is, even within the PSU basket, it's better to remain overweight on the fundamentally better names rather than remaining overweight on certain names just because there is an expected news item over there. So we would prefer to stay away from them as such.
So what are you going to play by?
So within the PSU space, we are very positive on companies like Cochin Shipyard, which is one of the largest shipyard companies. It has a very steady order book, excellent execution as well. So that's a company which we're positive on as of now. Other company which we are very positive on is Bharat Electronics, especially with the kind of order book that they have, the kind of execution that they have done, especially with the visibility available on their growth outlook for the next at least 2 to 3 years. We do see a lot of up move over there and a lot of opportunity over there.
Even after the government announcement on the margin changes?
Yes, that is something which will happen, but the stock has already priced that part in.
All right. Got that. Stay on with us, Nitasha. We have to take a very short break right here. We're in conversation with Brijesh as well as Rahul. We'll take that break, come back on the other side with a dealing room check as well as the Fab 4 stocks of the day.
Completing 100 years of building beneficial relationships with our customers and stakeholders, Union Bank of India celebrates its 100th Foundation Day and wishes all viewers a very happy Diwali.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise. अब तो इंश्योरेंस पॉलिसी ले ले.
Insurance?
कौन सी कंपनी से लूं?
सोचना क्या, चूज वही जिस पर हो पूरा भरोसा।
वीरू, go for convenience. My company is online, quick and simple.
बेटा बट पॉलिसी समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है।
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना, same choice. LIC.
LIC trending with times. 62 सालों से हर generation की पसंद.
Completing 100 years of building beneficial relationships with our customers and stakeholders. Union Bank of India celebrates its 100th Foundation Day and wishes all viewers a very happy Diwali.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. Only on Bloomberg Quint.
Completing 100 years of building beneficial relationships with our customers and stakeholders. Union Bank of India celebrates its 100th Foundation Day and wishes all viewers a very happy Diwali.
Back with countdown right here on Bloomberg Quint Live. 29 minutes left for the markets to shut shop, and it's a very flattish afternoon for us, or a flattish day of trade. Bring up the European markets and see what they are doing in the session today. Of course, the US markets will also come up, there are futures will also come up on your screen. But the European markets trading with a tick of red, about 0.5% or 0.75% for almost all of the key indices. The Dow futures too marginally off. So this rally that was there for better part of the week, kind of coming to a bit of a halt at the end of the week. Not quite what we would have anticipated, nevertheless, or wanted maybe. But even on a day like this, a bunch of stocks in the green and doing very well. Let's find out what's made it to Sumit Sarkar's list of the Fab 4 stocks of the day. Sumit, good afternoon.
Good afternoon, Niraj. So on the Fab 4 list, first we have is Dredging Corp. Now we all know the reason. The government is, the cabinet has cleared the stake sale of government. Now government is going to sell all its 73-74% stake in Dredging Corp, and the stock has locked in an upper circuit on the back of that. Second we have is Hindustan Aeronautics, and the stock has gained nearly 14% after the company reported a strong set of numbers. Now the company's second quarter EBITDA jumped nearly 4 times to close to 523 crore rupees purely on the back of lower cost of material, and that has resulted into a 13% upside when it comes to Hindustan Aeronautics. Now third on the list is PC Jeweller. Now you would be surprised to know that the stock was down nearly 8% and now is up nearly 6% in trade. Volumes are nearly 2 times its 20-day average, and in the last 10 trading sessions the stock has gained nearly 80%. And the last on the list is HPCL. Now falling crude prices and appreciating rupee had to result into a 5% up move when it comes to HPCL, and that's the reason why stock is up nearly 5% in trade today.
All right, Sumit, thanks a lot for that. So those are the Fab 4 stocks this afternoon, but lots more stocks buzzing around on the back of specific news as well. So you've got the spotlight on Linde India, what's been happening in Dr. Reddy, and some news around NHPC as well. We've got Sharad Dubey who's joining us right now to talk about all of these buzzing stocks. Sharad, over to you.
Good afternoon, Devina. The first stock which we are looking forward is the Linde India, which is almost up 18% this time. With the main news being the company's board has received proposal for voluntary delisting of its equity shares from the parent company of the BOC group. If this proposal is approved, then the company will have to pay around 1,200 crore odd rupees to the public. Presently, the company is having around 75% stake with around 64 crore shares. So they want to increase their stake to almost increase it by another 25 odd percent to make it a 100% equity stake. Recently, in the news which we had covered, Praxair and Linde AG had announced their global merger. The second stock which we are looking at is the Dr. Reddy's, which has been corrected by around 2 to 3 odd percent after Bloomberg Quint accessed Form 483 with 8 observations on the Duvada plant. Apart from this, the company had received around 5 repeat observations for its 483 form. The analysts feel that there will be a slight delay in getting the plant cleared, and this will add to the further escalation. Apart from this, no new product approvals will be seen when this company actually completes the clearance of the plant. Apart from this, the company has responded by telling that they will respond all the stipulations within a special time. Apart from this, we have NHPC, which is up by almost 7% on the news of a buyback. Well, basically, we don't have enough details of the buyback as such, but maximum buyback which we can expect is around 25% of the share capital. If we see the net worth of the company is on 31st March is around 30,000 odd crores. The maximum buyback which we can expect is around 7,505 crore rupees. The company is sitting on a cash pile of around rupees 3,504 crore rupees as on 31st March 2018. This decision is awaited as on November 14. Back to you.
All right. Sharad, thanks a lot for that. So there are 3 stocks that Sharad highlighted which are buzzing about in trade this afternoon. The other one to take a look at is an Indian bank. The stock has seen a cut of closer to about 12% right now in intraday trade. That's only worsened from the start of the trading session at the lowest point of the day now. 230 is where it's trading at. Nitasha, do you track some of these smaller PSU banks? I mean, off late they've had a swell run, but they have seen an equally fierce profit-taking bout.
So I think if you're looking at the PSU banks, the way we look at it is it makes more of a trading bet than a fundamental bet. Other than SBI, the rest of them still have issues with regards to their balance sheets, with regards to the loan growth, and more importantly on how they're going to change their practices to take care of the asset quality going forward. In addition to that, of course, capitalization remains a key issue for them. So despite the fact that they're trading at very attractive valuations, we would prefer to stay away from them overall. Within the pack, of course, SBI still looks better than the rest, but having said that, we still prefer private banks over PSU banks.
So which would those be?
Within the private banking space, you have banks like HDFC Bank, ICICI Bank, Axis, wherein they have been able to show a strong growth both in their terms of the loan book as well as in terms of the NIMs. Of course, cost of borrowing is set to go up, but they've in the past they've been able to pass that on quite easily. In addition to that, with the kind of liquidity crunch that we're seeing on the NBFC side, there is a potential for market share gain as well on the retail financing front. So we would prefer these banks vis-a-vis the PSU banks.
All right. Yes Bank, though, in today's session is the top gainer on the Nifty right now at 226 right now. A good 10% given a bumped up, and last 7 days performance of Yes Bank takes the tally up 25% on the stock. Rahul, anything on the charts on a Yes Bank post the last 7 days performance?
I've been fairly positive on Yes Bank, and I would say that there's still more throttle, although I think around the current levels you might experience some resistance. My bet would be that if you're a short-term trader and you're trying to bet on immediate momentum, I would believe that 225 to 235, somewhere within this area, you are going to get into a strong resistance bet. So we're kind of playing with fire, in my opinion, if you're buying in right now for the very near term. I would say let 235 odd get crossed on a closing basis before you conclude that the stock is fit to move to levels of 280, 285. So I think at this juncture, I'd rather wait and watch than jump in.
You know, it's interesting that what Nitasha said about how some of the smaller PSU banks might be trading plays. Rahul, are any of these, and then I would want Brijesh to come in as well, but Rahul, are any of these mid-size PSU banks giving you a trading play? There is OBC, which is up about 6.5% in the session today, and it's had some of days like this in the recent past. Bank of India is up about 4 or 5% in the session today as well, and that too in the recent past has done well. Union Bank is up about 3%. Any of these mid-sized PSU banks that feature in your trading list?
Amongst the names that you just took, I would kind of still stay away from a Union Bank, but yes, OBC would probably have immediate targets of about 95 to 98. That's the expectation we have. So if you look at a percentage yield, you still have a fairly good opening there. So keeping a stop loss at 84, I wouldn't hesitate buying into an OBC. But you know, again, this is not a sector I'd like to get heavily overweight on. I kind of tend to go with a view there that the private sector banks look better, and I would say even on the charts, that is the story there.
Okay, Brijesh, the other set of stocks which are active today are selectively, of course, are sugar names. After 2 days or 3 days of a decline, a bit of a pullback, you know, DCM, EID, Balrampur, Bajaj, etc. Any sugar name that you would trade?
See, Balrampur Chini, if someone wants to trade, then 105, 106 would be the support level. But the stock has immediate resistance lies somewhere around 114 to 115. This is purely on the trading bed we can look out. And if we want, then EID pairing looks a little bit good for a shorter term investment point of view. So anything below 230, one can take a buy call and with the stop loss of 219 and play for the target of 245, 248 in for a shorter term time, somewhere around say a week or a 10 days, something like that.
Okay, a bunch of Diwali ideas, and we'll take one from Nitasha, Shankar in moments from now as well. But since we are talking about what to buy this Samvat, and Indian equities did begin the Samvat 2075 by clocking in the best Diwali gains in a decade after nearly wiping out the yearly gains over concerns of higher crude prices and a weaker rupee. As we enter the new trading season, we spoke to what are the pockets where people can find opportunities. We spoke to a bunch of experts. Take a look at what some of these market veterans have to say.
You know, the markets beat to its own drum. We like to think that, oh, elections come, market will fall. That doesn't typically happen. We had a very sharp break in the market, as you know, in September, October, 15% fall. So the question that must occupy investors, was this a break in a bull market or a bull market topping out? And the evidence so far suggests that it's just a break in the bull market. So obviously the index and individual stocks will probably head higher over the next Samvat.
Sure. There is a debate between running a diversified portfolio at this point in time against a concentrated one. Where would you stand here?
It's a very esoteric question that people do PhDs on. I happen to prefer a diversified portfolio, but you know, the people who know their businesses prefer a concentrated portfolio. So there's no right answer. It depends on what style works for you, sure, the amount of money you manage, for whom you're managing it. If it helps you, I run a fairly diversified portfolio. The top 10 stocks must be 50%, but then the discipline breaks down.
Right. Mr. Damani, we also have the returns of inflows in the United States. If you keep that aside, what are the other global cues that you're keeping an eye on that could perhaps impact global markets and perhaps India?
You know, the two things that are obvious are, of course, if oil prices again become buoyant, they've been under pressure, which has helped us tremendously. And obviously, if there's some big crack in the Dow, I think a regular crack we can handle. Those are the two major factors. And the thing, we need to get back our own confidence after the recent NBFC problems. We need to get confident about our markets. And I think that repair takes time. So hopefully we will repair.
Some of these global businesses like casinos and perhaps liquor, which have made into India, where do you stand on some of these?
I mean, those are some stocks that have fallen in this fall, and they look like good bets to make. So I think these are themes that I would be attracted to over the next 5-10 years, right, because they're great businesses, they're impregnable businesses. There's some great franchises out there. So whether it's in gaming or whether it's in liquor, whether it's in some consumption space, those stocks still look quite attractive to me.
There's also the question of elections this year. Can that cause some volatility? Are you expecting that to happen?
That election is always a very questionable issue.
Right.
One doesn't know the Indian people how they will turn out. So, but I think on the whole, the Modi has done a good job. That is, in the last 4 years, they have done excellent things. And demonetization, then GST, all these things are, I think, should put positive in the mind of the voters.
Right. Mr. Choksi, there is a question about whether or not you want to stay with the tried and tested names in the markets, or would you want to go ahead and venture out and perhaps take a little more risk with the relatively smaller names? How would you go about it, and what are you asking your clients to do?
Basically, my philosophy is that I first look at the industry, which industry is doing well. Okay. And out of that, I will identify a company which is good, that is, and management is first thing. Right. And financial and the growth of the company you have to see. But today the management plays a very big role. And I think I am rather going for a small company. I would like to remain with a mid-size or a large company because they can withstand the adverse circumstances.
Okay, Mr. Choksi, then I have to ask you, what stocks are you recommending to your clients right now?
Basically, today we are recommending Deepak Nitrate #1.
Okay.
Then Nosil is second number. Then third one is JK Paper. Paper industry is doing very well. Right. So JK Paper is there. Commercial vehicle, Jamna Auto is looking very good.
All right, a few stocks to watch out there. Deepak Nitrate, Jamna Auto being a few of them, according to KR Choksi. The markets for themselves absolutely flat now, but there has been a tad bit of recovery on the indices. We're just about smidge away from that 10,600 mark yet again. So recouped a little bit of those losses in intraday trade. The Sensex also picking up, and the Bank Nifty in the green by a comfortable 1/3%. But it's time now to get a quick check on what dealing rooms are talking about this afternoon. Darshan Mehta is joining us with his channel checks. Darshan, good afternoon.
Good afternoon. I think the buzz is to lot to do with the MSCI rebalancing, which will happen. So it's Tuesday night US time, so it will be early Wednesday morning. The two stocks that have been actively spoken about that will be included in the Global Standard Index are Divi's Lab and RBL Bank. Both of them have been doing well of late. So that's the buzz that we've gotten from the dealing rooms, that these two counters probably will be included. That's the first one. The other one is Yes Bank has been doing extremely well. HNI accumulation happens. The general buzz on the street is that the announcement of a new CEO candidate probably will come in the next 1 month itself. So that's been spoken about, and the counter is moving on decent volumes today. And the last one is Sun TV, doing well for itself. The general trend is that the movie Sarkar, which released, is doing well for them, and overall some of the domestic funds are actively accumulating the counter. So that's what's been spoken about in dealing rooms.
All right, pretty active stocks out there. Darshan, thanks very much for that. We were talking about some specific stocks and ideas, and Nitasha, I believe you like Greaves Cotton. Why do you like it?
So there are a couple of things that we like in Greaves Cotton. One is, of course, the fact that post a correction, again, dividend yield is looking very attractive there. So that's one major reason for accumulating the stock. But in addition to that, it has sort of positioned itself like a fuel agnostic engine player. So they are quite geared up as far as the electric vehicle cycle for the country is concerned. That's a big positive. And most importantly, the largest segment, which is the three-wheeler segment for the company, that has been in a prolonged slowdown. So we do expect that to change in the coming months. So that is a stock that we see at least 25 to 30% potential upside from here on.
So when would the earnings growth materially come about for Greaves? Would it be FY20 or would it be latter half of FY19?
So we expect that to happen around FY20. So we're positive from a FY20, FY21 perspective.
Okay, so you're essentially recommending people to accumulate this stock, not necessarily go out and put in large lump sum money at this
Absolutely. Stage. All stocks need to be accumulated right now, especially with the way the markets have been going on and with the kind of volatility expected, especially with the geopolitical issues as well as the elections.
And what's the earnings growth trajectory that you anticipate here, FY20, FY21?
So we expect the earnings to grow by about a CAGR of about 18% over there.
Okay, interesting. So is this the best play within that pocket, or is the price lucrative and that's why you're recommending it? I'm just wondering, would you club this under a cap good stroke auto ancillary, and is this therefore the best play, or would there be other companies available, because you track autos very closely?
So we're positive on auto, quite a few auto ancillaries. In this particular case, of course, is the price and the valuation that makes it very attractive. Other auto ancillaries that we're positive on, one is Swaraj Engines. This is one of the sole supplier of engines for Mahindra tractors, and with the kind of movement expected on the tractor side, Mahindra in fact has done extremely well as far as the tractor volumes are concerned, and we expect that momentum to continue at least for the next 1 year. So Swaraj Engines is another company that we are quite positive on in this space.
Interestingly, a lot of auto ancillary names coming about. I mean, for Diwali, we had Vinay Khattar who liked GNA Axle. We just heard Choksi talking about Jamna Auto. In the morning, we had one of our guests talking about Automotive Axle. So a lot of interest probably in this pocket as well. Do you track Parag Milk Foods from the dairy space?
We were positive on the dairy space, not Parag Milk Food as such.
Okay.
So
what do you like?
We were positive earlier on all of them. We were quite positive with the way the movement was happening, but then the valuations got very stretched, so we sort of stayed away from the sector since then.
Okay. Interesting. Okay, before we get in closing strategies, about a couple of percentage points back, Rahul Mohindar was saying that it might be playing with fire if you get into Yes Bank. And boy, it is on fire. It is now the top performing stock, 229 and counting. But I'm completely understanding where Rahul is coming from. After the kind of gains that it has had the last few days, it might be really tough to give a fresh buy call on a Yes Bank. But I'm revisiting these 2 or 3 names, Rahul Mohindar, and asking you from a perspective of somebody who has a long position already into these. One is Yes Bank. The other one is Indiabulls Housing Finance. And for whatever reason, if somebody had a long call there, the stock is now trading at highest point of the day, would you carry home the long positions?
From a Yes Bank perspective, I think, as I told you, my worry is not that it's negative. The question is about going long at these levels. So 230, 235, it's a point if you're a short-term trader, you want to take some profit and review if we can get above those levels. Again, on Indiabulls Housing, it's pretty much a similar story for me there. I would not be willing to kind of take a fresh buy at this point. But since your question was poised towards someone who's already into it, I would say one should at least look at putting in a stop loss here around the 845 level. So you should hold long, keeping that 845 level as a stop. I do expect the stock to move to levels of 890 approximately. So there's still some headroom here. I still think there is that upside on the stock.
Brijesh, a very liquid stock which is active in the last few minutes, actually was active throughout the day, has inched up further, and that is Future Consumer. Currently at about 49, has inched up about a couple of percentage points in the last 15-20 minutes. What would you do here? Brijesh, the question is for you.
Okay. See, right now it's been quoting at 49, as you have said. So someone wants to play for a buy side innings, and I'll say that keep a strict stop loss of 46.5 or say 47. Whereas on the higher side, 52, 53 would be acting as a resistance. Anything above that on the closing basis 53, then stock can jump to the level of 58.
The other one being NMDC. The session just earlier on this week where you saw a big cut come into the stock on the back of concerns around the Donamalai iron ore mine, though you did have a clarification coming in that their lease by the Karnataka government for the Donamalai iron ore mine has been extended for 20 years. I don't think that has led to any respite in the stock price either. I should see how an OMDC is also doing, because the day you saw NMDC crack, OMDC was up closer to about 17% in the same space. But nonetheless, now that the lease has been extended, I don't know how that will play out for the other competitor in that space. Nitasha, an NMDC?
So NMDC is a stock which always looks good fundamentally, but the stock price really doesn't move up or down much. We're really neutral on the company as such as of now.
There are a couple of queries before we get in closing strategies, and the paper companies, Nitasha, have been on fire really. So JK Paper was something that KR Choksi recommended. I think West Coast Paper the last few days has done reasonably okay for itself. I think in today's session too, if you can pull up West Coast Paper, it's not as liquid a stock as JK Paper is, but if you can get West Coast Paper up, higher in trade and then has come off. But yeah, the volume's reasonably higher. Any thoughts on any of these paper companies, West Coast, JK, etc.?
So we're positive on JK paper, not so much on West Coast paper, again largely on account of the liquidity issues. Fundamentally, there's not much to differ between the two companies, but purely in terms of the liquidity and the availability, we are positive on JK paper.
Okay. Nitasha, stay on one final question from you, but before that, closing strategies from both our experts. Brijesh, I'll come to you first, your top closing strategy.
There are few stocks which look good on the charts. From a pharma pack, Biocon looks good. 640, 641 has been quoting, has been trading on a zigzag way pattern, so it's giving a buy call right now. And the previous swings lows has been maintained, so it's been moving on the higher bottom formation. So keeping a stop loss of 628 or say 629, one can go for a buy set for the target of 654. The target can be extended to the level of 665. And another call would be SRE Infra. So when I have noted down, it was been quoting somewhere around 38 rupees 75 paisa. I think now it has reached to 39.40. So the stop loss can be increased to 37.5 or say 38 and play for the target of 42 rupees 40 paisa. Even for a short-term bet, one can play with this with a stop loss of 37 rupees 50 paisa and the target can be extended to 45. And another would be Godrej Phillips. The stock has been quoting right now at 854. One can take a buy call with the stop loss of 838 and play for the target of 870, and another target would be 890.
All right. Rahul, what are your closing ideas?
One of the stocks I didn't talk about was BPCL. I think there's a good upside here, even though we kind of had a slightly good up move over the last session or two. We are looking at 315 being the near-term target. So there's a good potential here. I keep a stop loss of 290 and buy it for a 315 target. May not happen overnight, but I definitely think over the next 4 or 5 sessions we should be there. Another one that I've already spoken about is Divi's Labs. I would still maintain that one could be looking at a buy opportunity on that.
All right, just one last word from Nitasha before we let you go. Post results of Cummins India. Firstly, did you see the results and how it shaped up? Because the stock really shot through the roof the day the numbers came out. And a follow-through happened the next few days for the counter. Would you have a rating on this one and a call on this one?
So we had a buy on the stock for a very long time, and of course, if you look at the previous quarter results, they were not that heartening. But we had continued to accumulate this stock, and despite the recent move that we've seen in the company, we still think that the fundamentals continue to remain quite strong. It's a strong player within the entire diesel engine space, and especially on the capital goods side. We continue to remain positive on it and would accumulate it on dips.
Okay, we leave it at that. Nitasha, thanks so much for joining in today and have a great new year.
Thank you so much.
Really appreciate your time today. Well, just about 3 or 4 minutes left for trade. You know, a stock that's caught my eye the last few days has been Adani Ports. It's on and off. It's featured in this list. Yeah, it's on the feature on the list of movers on and off. Maybe the 1 month chart or the 1 week chart would give you an idea that it's had some fairly strong moves on a number of days. Yeah, 7-day move of about 5%, but strong moves as you can see on a number of days. Again, the 1 month chart is as good or as bad as the 1 week chart. Rahul, quick thoughts here. Adani Port.
I would be saying that again, it's a question of would I buy at current levels, and you know that's where my issue comes up with a lot of these stocks. I've been recommending this stock for several months. I still like the stock, so to say. But I think the window that remains is again between 5 to 10%. So, you know, and it's really short-term play. So at this point, I would say, no, this is not a fresh buy for me. And, you know, if you're a short-term trader, you might probably say that there's more to go for it. But keep a clear stop loss. 320 is a reasonable stop loss to work with. I would really come to bigger conclusions past 345, 350. That's the resistance. That's the point where I think we'll probably go in the near term.
Okay, just stay on, gentlemen. So much more to speak about. Let's get you final thoughts on how the markets have shut shop today. Let's start wrapping up the markets. And a flattish day, which is probably not bad considering how the Asian screen was or how the European markets have looked. So there is weakness across the board in the world markets, but our markets have done reasonably okay because they haven't cracked too much. The Sensex, though, about about 1/3% or 1/4% lower. The mid caps and the small caps did reasonably okay. 1% higher for the small cap space, almost 1% higher for the mid cap space. So the broader markets not doing all that bad. Even I'll speak about it in a bit. Let me try and tell you what happened in the large cap space first. All marketing companies ruling the roost, and Yes Bank right up there. So look at that. Yes Bank 5.5%, HPCL about 5%, Asian Paints again a crude price fall beneficiary up about 3.5%, Indiabulls Housing Finance about 3.5%, Adani Ports we were just talking about it 3.5%, OMCs not surprised, BPCL2 featuring in that list, and Sun Pharma and Maruti somehow stand out for me. IOC wraps up the list. So essentially 3 all marketing companies in the top 10 list of gainers. The losers, Bharti Airtel in the Moody's note, clearly putting the stock under pressure, though off the lows of the day. Infosys 2.5%, TCS about 1.5%, Reliance Industries about 1.5%, and then the steel companies, Tata Steel and JSW2 under pressure for different reasons, of course, both of them. And to each of the companies has its own reason, but down about 1.5%, both of them as well. But if the large caps were lackluster, mid caps were anything but lackluster, 1% higher, Devina, reasonably good market breadth as well.
But towards the end, I mean, when we were at the start of the show, we did see them converge. But towards the end, you did see a better play for the bulls in the session. Taking a look at individual stocks, then I want to quickly highlight a few of the names. Dredging Corp being one on the stake sale that the government is intending to do was locked up on upper circuit since the start of the trading session. Following that, there was interest in stocks like ITI as well as Shipping Corporation of India. Strides Shashun being the other name that was really active in trade. Volumes picked up on that counter, 12% higher on the stock. The likes of Bank of India, Future Consumer, these were names that were really active and picked up in the session this afternoon. CEAT from the tire space also looks strong. That's Future Consumer up about 7%. We're still not closed for trade, so you're going to be seeing some price changes as well. CEAT was up 5%. Then you had the likes of an Indiabulls Real Estate, Voltas, REC. These are the names. NMDC is the other one that you should watch out for. That stock actually seen a little bit of a dip. So one of the losers in trade, NMDC closing, shutting shop at the lowest point of the day, 110 on the stock right now. Aside from that, a few other losers included the likes of Tata Global, Tata Elxsi, Dish TV, IRB Infra. These were some of the names that look fairly weak in a stronger market setup. So not to say that there wasn't some volume backing. IRB, in fact, the concern was that the stock declined on the back of heavy volumes as well. But overall picture still remaining positive for the mid-cap index, up 1%. And the weekly close, probably looking at the way things have shaped up, is definitely going to be on the positive side with the mid-cap index and the small-cap index. Nifty probably just about more than 2% for the week.
Yeah, well, it's been an interesting week, even though it's a truncated week and one holiday and one-hour session. But well, not a bad week. Let's actually get the weekly performers up on the screen before we talk about what happened in today's session and talk about the volumes, etc. This is what we've done in the period thus far. Well, flattish performance, but a clutch of financial names out there. Actually, no, not a clutch, just about 2 or 3. But Yes Bank, Bajaj Finserv, a couple of those names out there on the financial side, on the gaining side, but not too many heavyweights out there, Devina. You don't see a Reliance, you don't see an HDFC Bank, you don't see a Kotak Bank. All of them are missing from this list.
Right. Amongst the losers, actually, you should watch it for Cipla because that one had a rough week post its numbers. 13% given up. Vedanta is the other one that lost about 7.5%. Even with the coming off of crude oil prices, a few of the OMCs, actually just Oil India Corporation, lost closer to 5% in the week gone by. And even BPCL stacked up in the losers.
Yeah, and this is after the kind of gains that we've seen in these stocks today because of the crude price fall. Otherwise, the falls would have been worse off as well. Maybe the mid caps and the small caps or the Nifty 500 should come up on your screen as well. The mid cap index, this is fine. NBCC had some gains. Future Consumer has been gaining for some 7 or 8 trading sessions on a trot, so good going there. And PFC, and I would reckon REC2 would have been in this list of gainers, if not the top 10. So PFC, REC doing okay. Union Bank of India, again, bringing up the list of those PSU banking stocks which have done rather well for themselves all of this week.
And good numbers for PNB Housing Finance, propelling the counter 7.5%. But if you just take a look at the variation in terms of the kind of gains versus the kind of losses, it's heartening to see that your top losers have lost ground by just 3 to 4 odd %, barring the last two, Indian Bank and Balkrishna, and today's losses probably adding up to that. But the majority of the stocks in double digits amongst the gainers rather than losers.
Yeah, that too. So it's been a good week. Maybe the small caps too would have had an interesting week, and there could be some select gainers out there. But this is as far as the weekly performance goes. Just a quick recap of what happened today. The market breadth we've already highlighted. The volume should come up on your screen. It was a low volume day at least one, and I don't know what's happened eventually.
That's abysmal in terms of the turnover.
Yeah, well, the market is on holiday.
Yeah. This week actually has seen a lack of participation as such, but yeah, an average of 7 lakhs is what we've been seeing so far on a normal given day, 7 to 8 lakhs, and it's like literally half of that.
Yeah, so it's been an interesting week and low participation and not enough moves by the index. But final thoughts from our experts, and Brijesh is with us. Brijesh, how would you characterize what's happened thus far? Rahul actually, and what would your verdict be on the next few days? Ceteris paribus, other things not moving around too much, Rahul, what would you believe the index is slated to do?
I think we're going to be on a slightly neutral to positive stance over the next week. I don't think it's going to be straight line like we experienced over the last 6 or 7 sessions. I think on the upside, as I was pointing out, 10,730 to 10,750, that's the kind of resistance. So that's the level I'd be looking at. On the downside, I again don't look at any dramatic correction, so more towards 10,480 odd levels, we should see some buying. I think it's going to be a week of stock-specific action. My eyes are clearly on auto and OMC. I'd be a little shy of jumping into banks or, for that matter, some of the laggards in the market, so something like a ONGC, etc. I would still try and avoid stocks like those. I try and stay with the the bigger names within the Nifty. Again, try and stay away from technology. So that gives you a bit of a ballpark. Autos, OMCs, my top picks within the Nifty.
Okay. Brijesh, your closing thoughts?
See, no doubt, Nifty would be flat to positive, which I feel for a coming week has been concerned. And my only thing on the higher side is a little bit, resistance level lies somewhere around 10,660 or to 10,670. If anything crosses this thing, then 150 points or say 125 point rally can be seen. Whereas on the downside has been concerned 10,400 followed by 10,450 would be the support level. So any dip can be used for a buying purpose. And regarding with the sectors has been concerned, then power and pharma are the bed where I would be looking for a next week if it's been concerned.
All right, gentlemen, we'll leave it at that. Rahul, Mohinder, as well as Brijesh Singh, appreciate both of you taking out the time and sharing your thoughts and ideas with us here on the show. Well, with that, it's a wrap on this edition of Countdown. Thanks a lot for watching. But in the meantime, before we end, do hear out the CEO of AMFI talking about the inflows into the mutual funds this for the month of October.
I would say it's a reasonably good month in the sense that the net inflows is around 35,000 positive compared to September, which was a really bad month where the net outflows were over 2 lakh crores, which we saw there. I would say that considering the circumstances under which the market is behaving, with a lot of volatility and choppiness in the market, the inflow of 35,000 crores, net inflow of 35,000 crore augurs well for the mutual fund industry. And we are positive that maybe this will continue over the next couple of months together.
But the equity AUM continues to fall, and for the second straight month, it has corrected by nearly 11% to 6.6 lakh crore. By when do you see that recovering and the equity AUMs kind of stabilizing?
No, that is mainly because a couple of months earlier it would have fallen off substantially, but now you are seeing still positive flows coming in. You are seeing around 15,000 crore of flows coming into the equity in the month of October, and in September it was somewhere around 13,000 crore. So there is a small upward trend of new inflows coming into the equity sort of this thing. But I believe that we will recover that 10% whatever fall you said in the next couple of months when the markets start showing the positiveness, which we will see after whatever the global factors have settled down. One is the crude oil prices coming down. Then second one is the interest rates in India, as well as, let us say, the global, where Fed is still saying that in December he will tighten. But the positive thing is that crude has come down. Crude has come down to around $70 a barrel. Plus you have the elections in US, which are also positive in the sense that the Senate has been taken over by Republicans, but the Congress has been taken over by the Democrats. So this will have some positive impact into our markets as well. And I'm quite sure that over the next couple of months we should see our own equity AUMs starts rising.
What about our own elections? Do you see any jitters in the market in the run-up to the elections that are coming up?
It's a political question, but I would always say that when an election is going to happen, there will be a little bit of circumspection for the investors, because they will not know which way the wind will blow. So they will always try to hedge their bets. So I would say that if let us say a clear sort of a verdict comes out in the pre-election surveys that are coming out, then you will see a much more larger flows coming into the equity market.
So by March, what kind of trends do you see in the mutual fund market, at least for India?
I believe that the mutual fund market is going to show that resilience, and we will climb back to the 25 lakh crore of AUMs that you saw 2 months back. So I think that mountain we will climb. There's absolutely no issues, and we will see more inflows coming into the market, especially from the retail side, which is now seen. Even despite this market conditions, we see the SIP flows actually increasing. SIP is at around 7,900 crores for October, vis-a-vis 7,700 crores for September. So I think you will see a good robust flows into the mutual fund market.
Also, when we talk about the income funds, the outflows have been the highest since December 2017. How do you read that, and by when do you see that improving?
See, essentially what is happening is in the income flows, one factor that plays into the equation is the interest rates. So RBI has been on the tightening cycle over the last couple of meetings which they had done, except for the last meeting where they stayed put. And now with, let us say, the inflation not showing signs of increasing, and RBI saying that, okay, they will do only a calibrated tightening sort of thing, I would see that maybe partially the flows which had gone away from the income funds will start coming in, because people earlier had done a rotation of their money from income funds to liquid funds and then to the equity funds sort of thing. Now maybe a part of the funds which were parked in the liquid funds can come back into the income funds, because now they know for a sort of a certainty that the interest rate hiking cycle, if at all it happens, will happen in a very, very small incremental steps rather than on a higher step.
Do you see that the debt market has gone past the NBFC crisis that was going on, or do you see that is somewhere still going to continue for the coming months?
If you see that the perception issues of the credit event which had happened in September has slowly started coming down and calming the markets, I would say that essentially if you see the debt market, the government securities yields have fallen down substantially. It's more than 25-30 basis points it has fallen down. If you see the money markets, you're actually seeing that the NBFCs are able to good NBFCs are able to raise money through the CP market as well as through the bond market. So I think on a perception basis, the perception has changed and calmness has come back into the market. Now it's a question of action, in the sense that the people have to come back and put money into those mutual funds and also to the NBFCs.
The liquid and money market outflows have also fallen. Do you see them kind of now stabilizing? Because from 2 lakh crore to 55,000 inflows, do you see that improving going forward?
We will see that improvement happening, because mainly because of the perception issues, people were staying away from the market, and maybe some of them would have put the money back into the fixed deposits of the banks and all those things. But now this month we saw around 56,000 crore of net inflows coming back into the liquid mutual funds. So I personally believe that we will see the money coming back into the liquid mutual funds once the perception issue is over. And I'm quite sure that the perception issue is over, because we are seeing signs of NBFCs raising money. We are seeing signs of enough liquidity in the market. So we will see the institutional investors coming back into the liquid mutual funds.